are from. So I'm going to go ahead and touch up on kind of like a crash course on support and resistance. I figured a lot of you in here are complete beginners, don't know. So I'm going to go ahead and just start from there. So when you hear Forex traders, crypto, or really anything, you'll hear a lot of talk about support and resistance. And really what it is this right here. So when you see on your chart, you can place these lines. You see that there's these places which get tested. And what we call getting tested is when price goes up to it and it fails to break it. So whenever you hear someone saying we're at a resistance, that basically means that we have price action coming up and testing it up. So anytime price action is going up, you're considered to be at a resistance. Anytime you've got price action coming down to it, you've got a support. Now these are important because they help tell you what price action is going to be doing. So just to kind of get us off on the right foot, resistance again is when price action is coming up and testing this line here, this horizontal line, and support is when price action is coming down. It's important because, like I said, it's going to give you an idea of what price is about to do. Price works in patterns. Historically, it'll continue to do the same thing over and over again. So if there's a place in price action and price over here where price has had a reaction to either support or resistance, then we can safely assume that price is going to have a reaction again in the future. So that's why it's important to know where these areas are. So the way that we actually trade these support and resistance is we follow price action, and the way that price action moves within these is going to be something like this. Prices are always going to go, if it's in an uptrend, it's going to go from support to resistance, right? So we're going to go from support to resistance. Once you reach a resistance, it's either going to do one of two things. It's either going to go ahead and reject it and go find another level of support, wherever that case may be, or it's going to go ahead and break, which means that you're passing that resistance level. Price action has, for example, in this case, enough buyer support to go ahead and break through that level, that psychological level, and then typically retest it, break and retest. That's how we, at least personally, that's how I trade support and resistance. Same thing works when you've got price action coming down. As you've got price action going from a resistance on a downtrend, it'll go down to a support, that lower level, and it'll do, again, one of those two things. It'll either reject and go find the next resistance if it doesn't have enough seller volume, or it'll break and typically you see a retest before going down and finding the next support. So again, uptrend, we're going to be breaking resistance, retesting, looking for the next resistance. You want to think of price action, the way that I think of it is kind of like, imagine you've got a snake that's just kind of roaming through here. Once it breaks one level, it's kind of stuck in that level up until it breaks the next level. So if it's strong enough, it'll break through and it'll go into the next level, and it might get stuck there or it might break through again. That's how price action works. So when we go back and we look at historically, you can see these levels. Oh, can we avoid that right there? Josh, can you delete that? I don't know how to delete that.
Turn off annotation for attendees.
Okay.
I'm not sure where to do that.
Clear all drawings. I'm not sure where to do that, but that's okay. Just don't touch the screen and we'll be good.
You make me co-host, I'll do it and you can continue.
Okay. Let me see. Josh, can you make him host?
He's already a host.
Okay, then you're good.
Okay.
Anyways, so as I was saying, so you've got these levels that you can see here, and the way that you know that it's a valid support and resistance, personally, I like to see it being tested as both support and resistance. So if we can look at here, this area, we've got price action right here testing as resistance. Right here, we see these two touches right here. That right there and that right there. And then we've got price action testing as support. So to me, when I look at this, I see an area of strong support and resistance is being tested. So we know that when price comes up to this point again in the future, we can tell that more than likely something's going to happen there. So as price in the future continues to climb up, if it continues to climb up, we can expect something to happen there, and it gives us targets. It gives us an area of confluence where we know that potentially price is either going to go ahead and stop it and completely reverse, something like this, or it'll break through and retest just like it did right here. So this is a very clean example of what I was talking about earlier. There's your break, there's the retest, before it continues to the next area, which if we were to place a line, we can see that it was the next area of resistance. So that's what I was talking about earlier, where price will always try and look for the next level of support on a downtrend or the next level of resistance. Here it is. There was our next level of resistance. And you can see that historically, it was a place of both support and resistance. We've got a resistance right here. Right there. We've got a couple of touches to it. And then we've got this break right here, and it's testing again as support. So right here it was testing as support. It finally failed, but it was testing as support, so we know it's valid. So just like that. So you can see if you were to start drawing lines, that price kind of came up, rejected this area, came back down. Buyers got more momentum, shoved it all up again. We finally got above it and we closed above it. We retested as support. Ultimately, it still ended up failing and going right back down. But you know, because of the way that the candles are laid out and the wicks and everything, you know that that's a good area of support and resistance. So we know that potentially in the future over here, what could end up happening is we have this area right here where price will end up testing. And if it finally breaks, we know that we've got this area here. So again, we've got targets, and that's how we want to be trading this. If we were to go ahead and plot the support and resistance throughout this, you'll notice that they tend to play out really well. Support and resistance is often very well respected. It's one of the key fundamentals to starting in your trading. That's why it's one of the most important things that you can master. The more that you train your eyes to see this, the less that you'll actually need to draw them on later. When you first start, your charts will look messy. You will have support and resistance lines everywhere. As you progress, the more chart time you put in, the less support and resistance line that you actually have to place, because you'll be able to look at this and just like scan it with your eyes and know where you are. And typically, if you use this little crosshairs tool, it lets you kind of figure out exactly where it is. Like right here, I can tell there's a really good support and resistance because we've got resistance being tested over here, support being tested over here. You know that that's historically going to be a place where we're potentially going to see some sort of reaction to it. Right around here. So we're really close right here to resistance. So it looks like we're actually, we're struggling on this one right now. But if we have a break, we can be looking for a break and then a retest before we look for the next one. So now before we go to the next resistance. So now that gives us a target, because if you're looking to trade this and it follows your trade plan, whatever that plan may be, then, you know, you've got your entrance and then you've got your exit, potentially exit number 1, potentially exit number 2. And then you can also use it for your stop loss. So if you know that this was a level of support, because here we've got the resistance and we've got support, resistance, support, support, then we know that we can potentially place a stop loss right around, you know, here. You've got your entry, take profit 1, take profit 2, And that's how you can trade support and resistance literally on its own. Does that make sense? I want to see ones in the chat if you guys are keeping up with this right now. You guys should be taking notes. If you aren't taking notes, I don't know what you guys are doing. There we go. Perfect, perfect. Just wanted to make sure. Okay, so now as far as these go, there's, for me, 3 ways to tell how strong a support and resistance really is. And it's the way that you actually see it. So the way that I like to do it, I'll go ahead and get rid of all this, is I like to have, when I'm initially getting these, I like to have it on, where is it? Here it is, on the line. So whenever I'm actually plotting them, typically I'll do it on the line. But the way that I like to do it is for me, there's 3 ways. You'll either see a touch on each side. You'll see price action come and like literally touch place for place. There's going to be no gap. It's just going to be absolutely perfect. And then we can potentially have the overlap. And with the overlap, you want to place your line right in the middle of the 2 overlaps. Always look for, if possible, your line to be touching both support and resistance. But you're going to have one of these 3 scenarios, or the gap. This one is going to be the most precise. Whenever you have price action coming by and touching at the exact place, and you have multiple of that, that is the most precise support and resistance. That is on point. Whenever you have these 2, they're still great, but you always want to look for this one first, because this one is going to be the strongest support and resistance and the most precise one. Whereas these ones, they're a little bit iffy, but they're still good. If you can find this one, this is the best. I would say this is the second best, and then this is the third best. That's what you want to be looking at when you're actually placing this. So if I were to get rid of this right here, get rid of all my MAs, we can look and find some of these. So for example, let's see. Is this big enough for you guys? I want to make sure that everybody can see this. So like right here, we've got perfect touch as well as perfect touch, right? Perfect touch, perfect touch. That is the best, the most precise place that you can put it. So if you have a zone that has a whole bunch of different places that you can potentially place your line on, your horizontal line, that is, in my opinion, the best place to place it. If, for example, you've got something like, let's see, trying to look for, I think about right here would be a good place. You've got a perfect touch right there, but then you've got an overlap right here and right here. So that's how I know to place this one there. You've got an overlap, but you've also got this one telling you that this is precisely the point where price failed to actually break. So that would make that valid. And then a gap is going to look, let's see if I can find a gap. This is too perfect. Let's see. Thank you. Oh, now how do I get out of the annotation? There we go. Okay, so looking for the gap. I think I found one. Not the best gap in the world, but it's still a gap regardless. As you can tell, we've got a space between this one and this one, between testing as resistance and testing as support. So while it still is, you could potentially even find a better place. But regardless, the gap is going to be the third one, the least strong. I'm always looking for the perfect touch when I'm actually plotting this. And the way that I start plotting these is I start from top to bottom and I look at current current price action. So I'll go ahead and start from top, and then I'll start placing them as I'm as I'm going down. I'll look for places like I know that this is a point of failure. Price failed to break this point. I don't see anything else nearby. Actually, you've got this over here kind of testing it, but you can start right around there, and then I work my way down. And I don't like to waste too much time doing you know, a whole bunch of support and resistance if price action is going to take forever to get there. I just work off of current price action. So I would likely just be doing this right here.
Yep. Focus
Just
on what's
this.
relevant.
Yep, because if you're sitting there doing something like way up here, it's going to be a while before you get there. It's great practice. Don't get me wrong, it's great practice. But if you're doing this to find out your bias or find out, you know, where the different levels are going to be, focus on the more current price action. So probably like just this for a month or something. This is the way that I do mine. There are different ways to go ahead and do your support and resistance. Different people will plot them in different ways. I like to do it this way. It works the same way across all time frames. Typically what I do is I start on my monthly. I look for my majors, and then I work my way down. And as I'm working my way down, here's a quick little tip for you. Make sure you're using your TradingView tool. So if you go right here and you go to settings, you can actually click on visibility and have it set up just for the month, so that when you go down to a lower time frame where it's not relevant, you're not having to deal with that noise. So right click, go to settings, visibility. I don't need that in the monthly. I just need that maybe in the weekly, or maybe weekly and daily. If I go down to the daily, I'll be able to see that right then and there. That's how you keep your charts clean. Keeping your charts clean is incredibly important. Otherwise, it's way too easy to get lost. And you want to make sure that you're looking at just what's relevant to that time frame. You don't want to be reacting to a monthly support and resistance when you're on the 1 hour time frame, because it's just not relevant at that time frame. You want to be looking at whatever is actually relevant. But yeah, that's what I had for support and resistance. Do you guys have any questions on support and resistance? Drop them in chat.
Had some comments. I haven't seen any questions yet, but I might have missed something.
Quarter points are also a great way of doing support and resistance. I don't personally trade quarter points,
Depends on
but
the
then
pair
again,
for me.
it also depends on the pair too.
Like
Some
UCAD
react to
loves quarter points.
Exactly. Some
UCAD
react
loves them.
to other levels better than others. Depends on the pair that you're working with.
The most important thing you can do is don't make assumptions that quarter points are always going to be respected, because it's not going to work that way.
I think personally that when you're actually plotting them like this, it's actually more accurate than quarter points, because with quarter points you're basically expecting that to be reacted to, which is just more of a psychological thing, whereas these have already been tested and reacted. Like if you go back in price action, you will see them being tested and reacted to many, many times. And what's happened in the past will likely happen again in the future.
And that sometimes is the case with QPs, but do your own support and resistance analysis. And if it lines up with a quarter point, then that's extra confluence. But yeah, I wouldn't just place lines at quarter points and like trade just to the quarter points.
Yeah, I've noticed what Damon is saying about the whole numbers reacting more than quarters. That is especially true in the higher time frames. I don't know about the lower time frames, but the higher time frames, I actually do that with my monthly and weekly. Whenever I'm plotting my monthly and my weekly, I round it to the round numbers. I don't actually just, because with this one you don't necessarily need to be as precise. Like for example, this right here, it's okay right there, or we can just round it and then get a whole number, and it's likely going to be reacted to a lot better. So on the higher time frames, I do it like that up until the weekly. It's not until the daily that I start getting very, very precise, and I'm like looking for the most precise place to go ahead and place it. And I just work it down like this. I'm just like looking down, just scanning left and right with my eyes, looking for what is tested, what area has the most tests, and everything like that.
Yep. How to change time frame in TradingView?
right here. So that's right up here. You can have it. These are the ones that I use the most. This little drop down, you can add different ranges. If you have like I don't know if you wanted to use like a 6-hour one, you just put it right here, 6 hours, add, and then you've got a little star, and then they show up right here. So this is how you change the time frames. I think someone asked how to clear the chart. There's a little trash. Just click on that.
I think right
You can
click,
place
remove
these.
drawings too.
I tend to place them with a line chart, but you're more than welcome to place them on your candle chart as well. That's also totally acceptable. It's dependent on you. The only thing that I would say is if you're going to do it on the line chart, always doing it on the line chart. If you're gonna do it on the candlestick, always do it on the candlestick. Why? Because you want to make sure that whatever it is you're doing the same thing over and over again. That way you're limiting the amount of things that you're changing every single time that you go trade, and you're more likely to be consistent. You can't expect consistency if you're not consistently doing the same things. You know what I mean? Like, you don't lose weight if you're not consistently dieting well. You don't chart and trade well if you're not consistently charting the same way. That's why I say, if you're going to use the line chart, do the line chart every single time. If you're going to do candlestick chart, do the same one every single time.
After a huge bullish run, am I muted? No. After a huge
No.
bullish run or bearish run, do you go review the market to find the point of resistance that lines up with the bullish or bearish run?
So as far as that goes, if I have a huge run, after the huge run, I typically stay out of the market, to be completely honest with you. Because usually after that, that's when everybody, like all the new traders are going to be jumping in. They get excited. They're like, oh, market just moved 100 pips or whatever. That's when I'm already out. I try and get in before that that run actually happens. So I'll come back afterwards and redo my analysis to see where it ended and everything, and see. And typically after something like that, I'm pulling out Fibonacci. I'm not necessarily pulling out support and resistance. So usually I'm not in at that point in time.
Yeah, and especially as a beginner trader, it's really easy to get caught up in your emotions and try to jump on a moving train. But try to avoid that that impulse, and just understand that there's endless opportunities in the market. So if a move has already happened and you're trying to jump on it after it's already initiated, a lot of times you're going to get burned doing that. So just take a step back, like Jordan says, reevaluate, establish new support and resistance areas, pull out Fibonacci, whatever the case may be, and just reassess the situation rather than jumping in and trying to FOMO into it.
How do you plot support and resistance with prices in new territory? Look at the previous price action. If, for example, we have something like this, that there might be that time where you're in, like Damon said, a brand new price, right? You're making brand new highs that have never been done historically before, or maybe they haven't been done in a long time. If that's the case, there might not be something there, but I like to look, and typically there's going to be something recent that you can go off of. So I would go off of, for example, this one, I would go off of this right here and just try and figure it out from there. At that point in time, if there really is nothing, let's say we're on a brand new high, there's absolutely nothing there, that's when my Fibonacci is going to give me my targets. Because when you pull out your Fibonacci, for me, it gives me 0, negative 27. It gives me those as targets, and those typically do tend to act as a form of support and resistance. Oh yeah, Fib is gonna definitely, like, I can go on for days about Fibonacci, so that has to be a webinar of its own.
Yeah, we'll do that
Can't
maybe
jump
next
into that
week.
right now.
Yeah, we'll do that maybe next week. But cool.
Good question,
Orion, is there anything you want to add to support and resistance real quick? I mean, I could add some too if you want me to. It's up to you. Whatever you want to do.
I mean, I personally don't have anything to add to the support and resistance. I personally don't trade support and resistance. I just do supply demand, which is similar. So
We're going to cover that in a second though. So, but yeah, nothing else support and resistance then.
Nope.
Cool.
All right, go ahead and stop sharing my screen.
Cool. If there's no other questions specifically about support and resistance, I want to give it over to Orion and let him cover supply and demand, since that's what his approach is for it. It is very similar, guys. So just keep your support and resistance understanding in mind, and I'm sure Orion will talk about how they're similar and how they differ. But yeah, let's just kind of give it to him and let him do his thing.
Yeah. Oh, by the way, this trade that we had called last week on the webinar hit that final target of 126.
Yeah.
127 pips given away last Sunday. Was it last Sunday? Yeah.
It was last Tuesday. Yeah.
Was it Tuesday we did it? Yeah, something like that. Oh,
Anyway,
yeah, you're right.
I like it.
You're
I like it.
So let me go to something new. Drawings. Okay. So supply and demand, same thing as support and resistance. The difference with supply and demand for me is it gives you a better range of where price can be rejected from. So I'll draw these zones on every time frame just to get an idea of where price is or where it can reject from. But I, like Jordan said, I don't typically leave, let's say a monthly demand zone or supply zone on my chart all the time when I go into lower time frames, because sometimes it'll get a little bit too big. So let me see if I can see that in the lower time frame. Auto. Okay. So on the 4-hour time frame, this is just too big. You know what I mean? So I wouldn't keep that there on my chart. And price isn't that close anyway. So for me right now, looking at the monthly time frame, I wouldn't really have any supply and demand zones that I would draw there. So at that point, what I would do is drop down to the weekly to see, based on where current price is, are there any levels? And typically, just a good rule of thumb, a good place to draw your supply and demand zones are at higher highs, higher lows, lower lows, or lower highs. So right now, go ahead, I'm sorry.
I was going to say the what you're referencing there, guys, is from our market structure webinar last week. And if you haven't watched that yet, I recommend checking out the recording because then you'll understand what he's talking about. Right. But yeah, for those of you over here.
Right now, looking at the weekly time frame, it's like this could be, well, this is a lower high, but because prices, like the candles are kind of choppy, I'm not going to draw my zone there. So it's probably going to look better on the daily. So if we come down to the daily, we can see, okay, boom, this level, previous lower highs in here, lower high. Well, I guess this would have been considered a higher high, but regardless, draw a zone. I do my zones typically, depending on the time frame, but good rule of thumb, tip of wick to the tip of the body of the candle. In this case, I'm going to use the bodies here. I like to see like a bullish and a bearish candle to confirm that support or resistance. So we can see it was resistance here, rejected here, broke through here. This was most likely news or something, came back down, or a high news week, I should say. Came back down, resistance, broke above, support, kind of like what Jordan showed you guys earlier. You get a break and retest. So you had that break of resistance, came back, retested, and then took off. Now, the reason why the zones work so well, in my opinion, is if I plot a line in here, let's just say I place a line here based on this wick. What a lot of new traders will do is when price comes to that line, they're automatically thinking, oh, okay, I can buy there because it's a resistance line. Whereas when you're dealing with a zone, you know that price can float in this zone. So when I drop down to the 4-hour time frame now, let me highlight this area. Boom, drop to the 4-hour. Okay, so now when I'm on the 4-hour time frame and I'm looking for my trades or whatever the case may be, I'm going to wait to see 4-hour price slow down in this daily zone. So I know it's resistance over here, rejected the top of the zone here. So you see how it can float. If I just had a line, most likely would have gotten stopped out. But me looking at the zone, I can say, okay, let me see what price does in these regions before I take that trade. You can even say this would have been a head and shoulders pattern, which is something completely different, but get into that another time. But came back down, rejected here, price came back through, support. So now I'm starting to see price slow down. Even if you draw a 4-hour region here, make it another color. Let's go with this. Okay, so now I'm starting to see price find support in my daily support zone. So that's another confluence. Okay, cool. Price is looking to go bullish. We broke resistance on the daily. We tested it as support, broke it on the 4-hour, testing it as support, dropped down to the 1-hour. And now you can see how this daily zone is kind of getting in your way. You can delete it because essentially you don't really need it at this point because you formed your 4-hour support and you know that that's in your daily zone. So you're fine. So now anytime you see price come down to this support level, you're simply looking for your price action signals, you know, whether it be your bullish engulfings or, you know, whatever market patterns you look for, morning stars or whatever, you can start looking for those patterns in that support region because you have enough confluence that it's a strong region. So if we drop down to the 30-minute, which is usually my entry time frame, 30 or M15, we can see multiple price action signals and formations that show bullish momentum. So one of them is right here, this morning star, which is pretty much a bearish candle, a doji, and then a bullish candle. I go over it in my ebook that a lot of you guys got earlier in the week, but this pattern here, and then once I see price come back and retest, I can enter. Long, stops below these lows here, and then my targets are going to be based on, you know, a higher time frame. Wait, just got lost. Okay, here we go. So my target can be based on, let's say, you know, if you're an intraday trader or whatever the case may be, these 4-hour highs in here, whatever, 4-hour level of resistance. And how you find that level of resistance is kind of by looking left. Okay, we have highs here. We had some highs over here. Let's see how that looks. Let me change my color. Delete this. Whoops. Okay, so based on this previous lower high over here, tip of wick, tip of body, you can see when price came into that region, we had rejections, nice intraday move, came back up, rejected again, tried to reject in here, but this is where the zone comes into play. We can see that from the top of that body to the tip of that wick, price was respecting that region. Wait, just froze, there we go. Price was respecting that region, rejecting the top, rejecting the bottom. And then once you saw these bullish closures above the region, you could have then said, okay, it looks like price is trying to continue on. So you could maybe drop down to a lower time frame to look for, let's see, for that entry. So let's see how this looks on the 1 hour. For me personally, it was a little too choppy, but you could have entered even here or something like that. But more times than not, 9 out of 10 times, if you just simply draw your zones based on previous lower highs or lower lows or higher highs or higher lows, you'll be fine. You know, I'm not going to overcomplicate it for you guys. It's really that simple. So we had a previous high here, resistance, 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 broke above, support, 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 support. Once it finally broke back through, like Jordan said earlier, price is going to do the same thing more likely than not at certain areas. So we can see once price left that area, it took a while before it came back. But when it came back, look what it did. Broke above, some manipulation, whatever, but it rejected that level very, very heavily. You know, so now when you're looking at, okay, where is price going to reverse from next? For me, it would be this level, because if we look left over here, tip of wick, tip of bodies, over there, resistance, support, resistance, 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 support. I'm expecting to see support in here. My bias for the week on GJ this week, my bias for GJ this week is bullish, just solely based on the fact that it's at this major, major liquidity region. So does that make sense? Let's see some ones in the chat if that makes sense for everybody.
Cool, cool. Do we have any questions about that, guys, or the differences between support and resistance, supply and demand? I'll touch a little bit on it or answer any questions that you have. Just do like a quick, there's one thing that I do a little bit differently than these guys. Same principle, just a little bit like support. Or you like supply and demand more? Yeah, I mean, I think that understanding both is important. In order to really understand supply and demand, you also have to have a strong understanding of support and resistance. It's just a preference thing, really, of what you prefer. For
example, and one more thing, just to go into the support resistance a little bit. So for me, how I get extra confirmation on an area is on the daily time frame. I do my support and resistance lines at those same previous highs or lower highs, depending on the trend. So I'll place my line at the bodies of the candle, because what that shows me is that's the strongest price point. If I go to a line graph, I'm sure that's where the line would line up with. But like Jordan said, if you're going to do it on candles, do it on candles. If you're going to do it on lines, do it on lines. So for me, I'll just simply go through and say, okay, these are my daily levels. We can see price rejected that level there. Based on this line here, price rejected, but it still can spike through those regions like we did here. So that's where maybe placing a zone to say, okay, tip of body, tip of wick, drop down to the 4 hour, and we can see how that rejected perfectly the top of that region. If we go down even lower really quick, you can see how you could have caught this beautiful entry. Let's see, boom. So for me, whenever I see price form resistance or support in an extremely strong area based on the daily or the weekly, when price did this, I would have sold. So let me see how M15 looks. Okay, or even on M15, even if you didn't catch that wick, boom, entry in here after this bearish engulfing right on that pullback, stops right above that region, about 40 pips. And then targets for me would have been this daily support. So we can see prices still moving down, but based on the closure of these bodies here, we can see why price is going to come there. And like I said, that's where I'm looking to go long from. So that's how you kind of build your confluences when looking to take a trade. Make sense?
Cool. I just wanted to kind of touch on the psychology behind why all of this matters, because I get that question a lot too. People are like, okay, but why are those areas being respected? And I just want to kind of touch a little bit. Well, actually, I guess I can take the screen if you want me to, Orion.
Oh, yeah. I think you just have to click share. Oh, no, wait, let me stop.
I think so. So I want to talk a little bit about the psychology behind all of this, guys. I want you to understand that these charts, the technical analysis that's being done here is really kind of like a self-fulfilling prophecy, in the sense that the only reason these levels matter is because enough people out there believe they matter. And you need to understand the psychology of that in order to be really successful in trading. And the more times that price action has respected and reversed at a certain area, the more likely people think it's going to do the same thing in the future. And traders and institutional bankers and all kinds of people out there that are moving, millions or billions of dollars understand that, and they play under those same psychological assumptions a lot of times. They also are well equipped to manipulate those areas. And so that's why you got to be careful not to get faked out or anything like that. I don't have the chat open for some reason.
You're good. I'm keeping an eye on it.
All right. But I just kind of, I wanted to touch on that a little bit. These levels matter because enough people believe they matter. So
Yep.
I get that question a lot. Why do they matter? Literally it's that simple.
Market
It's not
That's the
because
best
there's something
example I've heard.
special. Huh?
That's the best explanation I've heard. They matter because most people think they matter, and banks are going to react.
That's it.
Yeah.
And it can be that simple. They matter because enough people in the world believe they do. And that's it. There's something special about that number other than that. And there's a lot of traders out there like us and you and bankers and governments or whatever that understand this principle, and their enforcement of that psychology is what makes it true. But so I have a kind of unique spin on, God, I hate this window. It's like blinding me. I have kind of a unique spin. Let me see if I can actually see my screen long enough to find my rectangle. Okay. So I guess you could say the majority of my support and resistance, supply and demand is in zones. So I do more with supply and demand than support and resistance. But I color code mine, which a lot of my students have told me is really helpful for them. So I just wanted to kind of touch on that real quick, just building on top of what you've already been taught here. When I'm looking for a trade, right? So this is daily time frame, and I do my analysis from the top down, but it depends on what I'm trying to do. If I'm doing an intraday, I don't care as much about the supply and demand zones on monthly time frame. I care more about what's happening on daily and 4 hour. So if I'm doing like an intraday or, something I plan on being in and out within a day or two, I usually just hop on the daily. I capture my price using what I call major supply and demand zones. And then I work my way into current price action from there. So from here, I would draw a zone at the top of this, and my color coding, I do red for resistance. And for my settings, I just do the solid red for the border, and then the background, I turn it down to a 15% opacity, and I do it the second lightest color so that I can still see price action bouncing around inside of it. So I'll do red for my resistance, and then I'll establish my support with blue. And this is total personal preference. You guys can pick whatever colors you want. The only reason that these colors work well for me is because I'm a very visual person. And when I start to capture price action and I'm looking for my trades, it helps me to start from the most major supply and demand zones on the time frame that's relevant to me. And then I work my way down from there. So from here, you can see that we have another area right here that would be a support. So I'd come in here and I would draw another blue for support. If I have a resistance, so this would be a relevant resistance point here. And okay, so this is actually an important point. So this is blue currently, but you can see that this has acted as both a resistance and a support. And when I have that, I make it orange. And the reason I do that is because, in my opinion, levels that have been flipped as support and resistance multiple times in relevant price action are weaker areas of support and resistance or supply and demand. So those are areas that I consider reversals, but I don't expect reversals in those areas because they flipped so many times. And, you can see even in this case right here, we had an area where it tested this zone over here as resistance, it came back, and then it actually broke through and retested this area as support. Right, and then that didn't change, I don't think. Yeah, it did. And so you can kind of just work through your chart using these colors. That helps me. If I go down to like a 4 hour, now suddenly I can kind of recapture price at a more relevant area. You can see there's no coincidence here that this was an area of resistance that retested, and then we kind of found support in this zone, and it broke through and retested as resistance again on the way down. So, you know, when you're looking for support and resistance or supply and demand, a lot of these moves that you see are not coincidences. You can sit here for a long time and just mark up your supply and demand and support and resistance, and you're going to get a lot of really good practice out of that. And if you go through and, I mean, even right here, you can identify this as an area that it came back up and retested this as resistance. So, you know, you can come through here and make as many of these boxes as you want as you're practicing. And over time, like Jordan said earlier, you're going to start to notice these things on your own without having to mark it up. So, you know, I could, you know, this retested as resistance, and then we finally broke through. Even like if you zoom in on what happened exactly right here, we went up and tested this area and then retraced back down. That's a fib level right there. We'll talk about that later. And then we caught a Fibonacci retracement and then broke through the level and went back down and retested as support. So let me actually get this out of the way and just kind of clean that up a little bit. So we had this area right here that was acting as resistance. It tested the resistance, made a fib retracement, broke through, and then retested as support. So if I was following my color coding system here, I would make this red to show that it is a valid resistance, and then I'd make this next level blue to show that it's a valid support. So that's just kind of a little bit about how I do mine. I color code it in that way, and I think that for those of us that are visual learners, it helps over time for you to color code this, because just looking at this now, you can see very clearly, okay, this red is resistance, it broke through, retested support, and then now it's off. And if you go through and literally just mark up charts like this, just back test, guys. Practice, you know, literally just walk through the chart like I'm doing right now and identify these areas where there's been a test of or a retest of support and resistance, and then create these zones, right? So then this price came back down, formed new support. You can see there's several wicks that dropped into the zone. That's blue for support. It broke through, made a new resistance. You can even see right here, this is a gap situation like Jordan was saying. So this gap right here is what I'm talking about, where there was price action that came up and tested as resistance, broke through, retested as support. Does that make sense, guys? Let me pull up the chat.
One person had a question a little bit earlier, but I wanted to finish. How can you spot a fake out, or is it the same with manipulation? Eric asked that.
So I think that working with zones makes it a little bit easier to spot those fake outs, because a lot of times people make the mistake, like Orion was saying earlier, of plotting a support and resistance line and believing, okay, if we go above this line, then it's broken 100%. And you need to understand that even support and resistance lines are still zones. And I know that's going to confuse the heck out of a lot of you people, but a support and resistance line is the median point of that level. And you still have to imagine that there's trillions of dollars trading on the Forex market every day, guys. The chances of the exact point that you have your line plotted being the reversal area is astronomical. It's not likely. So you have to understand that even when working with supply and or support and resistance lines, consider it a zone in your head. And that's why a lot of times when I do my support and resistance lines, I'll actually put a zone through it. So I kind of do supply and demand on top of my support and resistance, if you think about it, I guess, because I'll go here and I'll plot a point in the middle. And again, same color coding system. And then I'll have a zone that I build around that line. So this is my support line, and the zone is my supply and demand zone that I'm dealing with. And so how to spot fake outs, I think the easiest way to spot a fake out is to understand that you're dealing with zones. If price action goes above your line, then you need to understand that that does not necessarily mean that you're flipping that support or resistance line. Like right here, we came up, and technically if I'd had this line drawn right here, this candle right here technically closed bullish above this line, and you could consider that a bullish sign, right? And long term it was, but then you had this huge bearish candle on 4 hour. If you got into a trade right here, a long trade, you would have got wiped out on a stop loss probably. And even if you weren't wiped out, you could have anticipated a pullback from that area and then gotten in on the Fibonacci retracement.
Understand
So
market structure with it will take you a long way. So you don't want to just focus on, when you're trading, just one thing. You want to put everything that you know together. So support and resistance, candlestick analysis, market structure, supply and demand. You want to put it all together so that you can come up with as many reasons to get in as possible. If you can't find a lot of reasons, then you probably shouldn't be in the trade.
what are you saying, Orion?
I was going to say, if you go back to where you were, that big bearish candle that you were pointing out, if you look left, this is kind of what I teach. Always wait for the pullback for that higher low, because look, it pulled right back into a liquidity zone based on a previous higher low. So if you draw a box region
right here,
a little bit lower at the body of the candles, move up right there. Boom.
Right here?
If you draw a zone across there, price spiked into that region to grab money. I tell my students, wicks fill orders. That's the most valuable thing you can remember, in my opinion, in trading. Wicks fill orders. Wherever you see wicks, that's where the bank is placing money or taking money every single time. So that's something to keep in the back of your head. Wherever you see wicks forming, especially on 4 hour daily, the banks are liking those levels and either placing orders or closing orders. So they're very, very strong levels.
Yeah, and you should listen to him. He snipes wicks.
Well said.
Yeah, that's it for me, I guess. Sorry.
Cool. No, you're good. Yeah, I mean, I think this is another good example right here. If you had, and this will be my last one, guys, then we'll move on to charting. But if you put so let's say this is the only price action you have so far, and you place this as your support, and you say, this is the exact level I'm looking for. Like, I'm not going to get into a trade unless it triggers this exact price point. If you look in previous price action and see that this zone was created from this peak right here, then you could have anticipated that this trade was going to be a profitable one. Like if you saw a reversal sign right here, like that's a candlestick reversal right there. And you could have, if you were waiting for this level because you don't trust zones, you want the exact plot point that you have set here, you would have missed this trade by just a few pips. Whereas if you consider everything that you're doing to be in zones, and even if we hadn't had the rest of that price action yet, and we created a zone with our previous area that we had here, we could have seen that it came down and it touched the edge of the box where we would have expected price action to come down to. So just try to, pair your supply and resistance with your support or support and resistance with your supply and demand, kind of use them hand in hand, understand what is actually happening with each of those techniques. I use both of them. Some people have a personal preference, whatever the case may be. Just do whatever works best for you guys.
And you like I said earlier, you want to pair that up with other things as well.
Right. Yeah. Don't just trade. Nothing that we're teaching you guys in any of these webinars is intended to be used exclusively, right? You want to combine all of these things. Like you combine support and resistance and supply and demand with market structure. And then what we'll probably cover next week, Fibonacci, that's how we could have expected this price point. Like I can almost guarantee this is a fib level. And so if you 50% retracement. So if you combine Fibonacci with these other moves that we're seeing, like I think someone asked earlier what confluence means. Confluence is basically the number of same bias reasons to get into a trade. So if I have a lot of, if support says, if my supply and demand says buy, my support and resistance says buy, my market structure says buy, my Fibonacci says buy, those are all confluences. And the more confluences you have, the lower risk that trade is going to be for you. And in this situation right here, this would have been a very low risk trade, right? Because we tested resistance, had a strong retracement out of that resistance area, touched into a liquidity zone, which is another form of confluence. Over here, if you look left, you can see all these wicks. That's a liquidity zone. In confluence with a 50% retracement, that would have been a really strong buy, and you could have set profit targets using Fibonacci or resistance levels that are in the future. So that's just kind of how you combine everything together to make good trades.
Well said.
Cool. You like Head and Shoulders pattern a lot. Support and resistance, general family name. I'm just kind of checking the chat. Seems like we're caught up here.
Yep.
If there's no other questions, I'm going to hand it back to Orion for a bit. You cool with that, Orion? You want to do some charting, take requests?
Yeah, that's fine.
All right. I think you can take it. Cool, guys. Well, thank you for that first part, support and resistance, supply and demand. I hope you learned something. This will be recorded for people that are saying you missed part of it. It'll be recorded, and I'll drop the link when we have it. Or it is being recorded, I guess.
Yeah, let's see a suggestion. What pair do you guys want me to mark up?
Got British pound odd, gold is being mentioned again. Gold, actually, we had a great trade on gold in the trade. Well, was it in the trade room or was it just one we took personally?
It was in the trade room.
Yeah, gold.
I'll do pound Aussie first, and then
all right. Got a lot of GJ in there. Odd USD.
We'll hit GJ as well. So with GA last week, it's very weird right now what's going on because there was no daily pullback whatsoever. We were in longs from this support level in here, kind of to touch on really quick what we just went over. Wicks, cross, tip of body, tip of wick. Look where price came back into. Perfect rejection, so we went long there. And then I was looking to go short from this region here based on these resistance levels in here. And then price gapped down last Sunday and never turned back. I was expecting to see a pullback and it just never came back. So right now with GA, what I would do in this situation, or what I did in this situation, was I went up to the weekly. Based on the weekly time frame, based on this wick here, support, kind of choppy, but support, resistance, resistance, resistance. I'm expecting to see a turnaround from this level here. Bring that across weekly, I'm sorry, daily. Okay, so with trading, like we covered in market structure, price has to create lower lows, lower highs in order to continue moving. Price can't just, oops, what the hell is going on? Okay, price can't just move in one direction and not pull back whatsoever. So I'm expecting to see a pullback this week to form that lower high before price potentially continuing down lower. So early in the week, I'm expecting to see long moves. Let me see what the lower time frame is doing. So how I would build this confluence would be simply going down into the lower time frames to see if price is slowing down. Am I starting to see sellers exhaustion to the downside? 4 hour.
A lot of times after a big move like that, if you don't get an immediate spike back up, like if it's not news related, what he's looking for is consolidation on to create a new support, especially, or to legitimize a support level. So if you have a support like he has drawn there and he wants confirmation that it's being respected, he's looking for price action to move sideways at that level for a little bit.
Correct.
And then once you have that confirmation, then your ability to buy from those levels, if you're trying to play the lower high move, is less risky.
All right. So for me, what I would do at this point is delete that zone. Leave my weekly level there. But this is the region I'm going to look to go long from. It's my sniper zone. Over time, you'll start to just see things in the market. Like I think based on experience that price is going to come down, form a double bottom in this region, and then go. 4 hour price gives me the confirmation that there's still room for price to come down based on this previous candle that closed on Friday. You had that shooting star, buyer's exhaustion to the top, little to no exhaustion to the downside, letting me know that sellers are still in control. So, and then as you can see, this zone lines up with the bodies and the tip of the wick.
Mm-hmm.
So for me this week on GA, I would look for, I'm looking for longs, I should say, but I do understand that price is bearish. Obviously we're looking for sells overall, but I just understand that price needs to form that lower high. I'd expect to see a lower high. Oof, that looks so good.
Right.
Oh my gosh. Right in there. And then if I drag this left, wicks.
Yep.
So this is going to be the region that I want to see price come into. And then from that region, I'll go short back into these extension levels.
Yep, that looks really clean.
So
And especially keep in mind the, if you keep in mind what Forex is and the institutional or the institution behind it, when he was saying like he expects price action to pull back into that zone again, getting stop hunts is I'm trying to think of the terminology that's not going to confuse people. So basically, after you have a big move like that, a lot of inexperienced traders will just buy without any other confluences. There's like, okay, this just came down a lot. I just need to throw money at it and see what happens, kind of thing. Mm-hmm. And the institution will stop hunt you, and they'll push wicks down into the low again to try to wipe people out of their trades or get you margin called before pushing price back up. And that happens all the time, especially on these big moves like this. So if you're trying to snipe the entry, you want to set your orders in the liquidity zone or in the low zone that was established, because pretty frequently you'll see price wick those levels before moving back up. It sometimes happens really quickly. It can be like, 1 hour candle has a big wick to the downside and then pushes back up. But you see that happen a lot. So you don't want to just enter on, without that confirmation of structure like Orion was waiting for. And it's okay to set limit orders, guys, especially, just understand what you're doing.
Right. It's like the limit order thing. You have to understand your pair. For me with GA, I typically don't set limit orders because I understand that even though my bias could be correct, that sometimes it'll just like spike an extra 30 pips past your entry. And you're like, well, damn, why'd that happen? And then it goes your direction. So for me, with setting limit orders on GA, my stop loss is what messes with me, because I'm like, okay, I'm trying to anticipate the spike that might happen. So I more so wait for the closures with GA, but with pairs like GJ or NJ, I'll set limit orders more so on those opposed to GA. And also the spreads on GA are usually pretty high, so sometimes it won't trigger. Even though price will go there, it won't trigger it, and then you're like, well, damn, my order didn't get triggered. So that is my GA bias. Let me cover GJ now. I saw a lot of GJ in there.
I saw some questions that maybe didn't get answered. Let me look. Jordan, have you seen anything that needs to be addressed?
One person asked the type of trader. So there's going to be scalpers. Scalping is when you're in and out of the market just looking for a few pips. You're in and out real quick. Intraday is when you're typically holding for hours at a time. Can last a little bit longer, but usually hours. And then I'm blanking out. Swing trading. Swing trading is going to be what Orion does mainly, which is going to be when you're holding for longer periods of time. So you're holding out for the bigger moves. So depending on your personality, how much time you have to invest into being able to look at the charts and everything is going to determine as what kind of trader you are.
Right. So with GJ really quick.
Market open.
Another thing is whenever you're trading a pair, you can build confluences by looking at that pair across other pairs. So if we're looking at GJ right now, and then we look at GA, then we can say, okay, it looks like the pound was very bearish last week, but it's looking like it's going to rebound based on the daily time frames or the weekly time frames. And then another cross comparison you can do really quick would be something like Euro pound. So, you see Euro pound was extremely bullish last week, while the pound was the Euro was bullish last week, while the pound was bearish last week. So that's something that I'll do just to kind of make sure that my bias is correct. Like if I'm seeing the Euro gaining strength, then most likely I'll see the pound continue lower, but that's fine, because if price breaks below this region or pushes up to this region and rejects, then I'll just short it. But as of now, looking at what price is doing, I'm expecting to go long on GJ, at least earlier in the week. 8-hour price is starting to slow down. 4-hour price slowing down. It's Sunday, so oh my God, that looks so good right now.
I don't know. I was gonna say, look at all. So when you see price making those wicks like that, guys, and it's moving sideways, especially when you have wicks going in both directions like that, that's a strong sign of that consolidation looks really good, especially after a big move like that. Like that looks like a good buy opportunity.
Looks like such a good buy right now.
You want to give some free pips out, Orion?
Bro, it's like I don't trade Sunday, and I'd be so mad if like we just saw some Sunday manipulation. And
Don't break your rules, bro.
That's another thing. It's like I really try to stick with my trading plan. But all right, just hypothetically, if I was going to take this move, my stops would be below this wick, so it's going to be about a 37 pips stop. As far as targets go, I'd be just targeting this region. So let's say 136,500, that round figure.
80 to 35. 80 pip win to 35 loss. Not bad.
And that's another level of support and resistance that's been tested in the past. And you can see that even that previous move wicked down close to that area. So, that's a strong gap zone, I think. So that'd be a good place to start taking some profit.
Yeah, I would be careful though. It's Sunday.
Yeah, Sundays
like it looks really good, especially on these time frames. But just be careful, I guess. Let me see M15 one more time. M15 didn't engulf this previous candle,
so it might push down another.
Let me see M5. Yeah, it looks like M5 can maybe come down a little bit, maybe double bottom, like on lower time frame,
Mm-hmm.
something like that. So it's a little iffy right now. But that it is looking very, very good. Maybe wait for this 1 hour to close. It has 17 minutes on it. It's out of session as well. Like there's no session going on right now.
Yep.
Between 5 and 6 p.m. Eastern, there are no sessions. So Sydney session is going to start at 6 p.m. So spreads are really high right now. I wouldn't mess with it personally.
Someone asked, are Sundays bad to trade, Orion? You want to talk on that since you kind of have your trading plan? Do you want to talk a little bit about what days you trade and why?
Yeah. Sundays, I'm not going to say, some people love trading Sundays and do fine with it. Some people are what you would call like gap traders. If the market opens and it's a gap in the market, then they'll trade the gap and try to make some money. But for me, the banks aren't open. There's no money being moved. So why would I be trading? Trading is about the trading of
Taking advantage
assets.
of the moves.
Yeah, you know what I
It's
mean?
small fish. It's small fish on Sunday. And so liquidity is low, volume is down. I mean, it's like you're trying to make a big move happen when, what does it say?
1%. Yeah, that's
There's no money moving in the market right now.
And that comes back to a fundamental understanding of what Forex is, right, guys? I mean, Forex is the exchange of fiat currencies globally, and the primary driver of liquidity in the market is banks and governments, and they're not operating at Sunday. And so you want to wait for the sessions, you want to wait for the banks to be open so they're moving money around, and that's when you can catch the moves, right? And so is trading Sunday bad? I mean, I don't know about bad. It's just kind of boring sometimes. I mean, you're going to see a lot of sideways movement. You're usually not going to see, because it's mostly just retail traders that are in the market on Sunday.
Exactly. So for me, and every week kind of varies somewhat, but my rule of thumb is I try to stay out of the market Sundays for sure, and sometimes Mondays, depending on what's going on. But Tuesday through Thursday,
The sweet spot.
more recently, as of like August, September, Fridays have been really good for me. So if you think about it in the aspect of, okay, think about if you work a 9-to-5 job. Mondays, you're kind of like, it's Monday, whatever. You're just getting into the office. You're maybe hungover from the weekend or not really feeling it. It's Monday. Then Tuesday, you kind of start getting into the swing of things, whatever. Wednesday, you're pumping. You're good. You're hump day. You're like, okay, I'm almost done with this week. Thursday, you're like, tomorrow is Friday. You're excited. Everything is going good. You're pretty much starting to close out your week. And then Friday comes and you're like, okay, I'm kind of checking out. So what you'll notice is Wednesdays and Thursdays in the market, very, very good days to trade the market because you have the most volume in the market on Wednesdays and Thursdays, typically. Now, Fridays, what you'll see is like retracements, stuff like that, because the institutions are closing their trades, hedge funds closing their trades, taking their money, whatever, getting ready for the weekend. So I'm not sure if a lot of you guys were trading in August or not, but if you notice in August, price was just moving sideways. The reason why that typically happens is because the hedge funds, major institutions, that's the vacation month for trading. Like this is August. All it did was move sideways, because typically, let's say COVID wasn't going on or whatever, everybody is usually traveling a lot in August before the kids go back to school, whatever. If you live up in the northern states, kids start back in September. You want to get your last vacation in before the cool weather starts, whatever the case may be. So August is usually a quiet month, and December, like around Christmas, New Year's, those last 2 weeks, you'll see it start to slow down. The volatility goes down because most people are with family, friends, whatever.
Spreads go up, all that.
Yeah. So where was I essentially? GJ, bullish. beginning of the week.
Yeah.
Yeah. Fridays. I don't like to take like long-term trades on Friday. Like this past Friday, I was scalping a little bit, well, intraday trading a little bit, but I don't take a trade on Friday and then hold it through the weekend. If I'm holding a trade through the weekend, it's because I've been in that trade from like Tuesday or Wednesday. My stop loss is at entry, and I'm waiting for like a bigger move or whatever the case may be.
Be careful with weekend holding too, guys, because if if price gaps on you and gaps your stop loss, it's not going to close.
Yep, and your broker won't give you the money back.
Your broker won't give you the money back. So especially if you're inexperienced, guys, do not leave trades open on the weekend. I can't tell you how many students I've had that have blown accounts because they're like, oh, well, I have my stop at entry. I just wanted to hold it through the week.
Yeah.
Broker doesn't care, guys.
It happened to me.
If price gaps on you and it skips over your stop loss, you're done as soon as the market opens.
And that's exactly what they told me. Like, I was like, I had my stop loss set. It was 16 pips. And it gapped down like 30 or 40 pips on Euro yen.
And especially in this climate, you just never know what's going to happen, guys. If we go to war on a Saturday or something, you have a trade open, you're just going to be like, oh my God. I mean, it's just like, there's nothing you can do.
Nothing. You're screwed.
So don't take the chance. Don't take the chance. Just close your trades on Friday, reassess on Sunday and Monday. And then, yeah, that's my advice. Don't hold
I
it.
agree. So last one, gold really quick.
I had a great trade on gold earlier in the week based on our analysis from Tuesday.
Yeah. Gold is, for the most part, moving sideways, but whoops.
4 hours pretty clean too.
Yeah, as we go into lower time frames, I'm bearish this week on gold. Where is it? There we go. So this is what I do. I plot so I do support and resistance lines on the weekly, I guess. I just put my support and resistance lines go based on the wicks of where current price relatively is. Yeah. So I see price wicked up here and price wick down there. So that's my weekly level. Now, when I drop down to the daily, I'll place a daily level. Sometimes I'll just do it by eye, but for the sake of teaching, bodies, and we can see how that gets respected. For the resistance on the daily, same thing, bodies here. 4 hour.
This is too perfect.
Boom. So, oops. Let's draw a region here.
Hey, Josh, we're twinning.
What?
We're twinning.
Oh, New Horizon shirt.
Okay, so I'm bearish on gold, but I feel like it's going to pull back first. Reason being, we do have support in here. This whole area is kind of weird because bodies here, drop down to the 1 hour. Wicks. So what I would do, can delete this. So one of two things can happen before you take this trade. Either A, price breaks below this level of support and retest it as resistance. Can short from there. So short the top of the region, stop loss right above these levels here. And see, like this is the only downside to a sideways moving market. You have so many levels of small minor levels of support and resistance, support, now turn resistance. But then when you move down a little bit, you still have support right here. You know, so gold is kind of moving sideways in a range. But for me, what I would do is to simply wait for the break and retest. I mean, you could short based on the engulfing, but I like to go high probability. So I think, okay, if this engulfs and I sell, I'm selling into support. You never want to sell into support or buy into resistance. So taking buys in here isn't smart when you know you're at a level of resistance. Now, once it breaks and retests, then you can start looking for your buys from that level. So for gold, for me personally right now, I would like to see, let me see. Price came down, lower high, broke. Oops. It's at 38.2 right now. Things a little bit below 38.2. I would just wait to see some type of pullback. I feel like these regions here, wicks, we drag it across, resistance, delete this. Yeah, I'd wait to see a pullback. It's moving sideways, so I'm not going to speculate. But overall, based on what the higher time frames are doing, I am expecting to see downside based on daily time frame. The extra confirmation would be gold. Oh wait, actually, yeah. So this was Friday candle. Gold hasn't even opened yet. So this is a nice setup here based on the daily. Shooting star, bearish engulfing with another shooting star.
Mhm.
So yeah, I just wait for some type of pullback before going short, because I think we can test this region again around 19 or even 1945-ish, something like that.
And gold is very fundamentally driven too, so it's going to depend a little bit on how the US dollar and stock market and stuff like that opens on Monday.
Right.
And I mean, you guys need to try to pay close attention to fundamentals in general. Just understand that the market is driven by them. The technical analysis that you're doing can usually be explained by fundamentals. It's kind of funny how it works.
Right.
But just try to keep both in mind when you're doing your analysis.
And always also try to avoid trading a sideways market.
Mm-hmm.
For me personally, I did take a buy on gold on Friday. I think it yielded like 80 or so pips, 100 pips, something like that. I don't remember.
So it called in the trader.
Yeah, I'm trying to shit a load. Gold went for, it almost hit take profit for 100 pips, and then we got stopped at entry. So it's one of those things where I try to avoid trading a sideways moving market, but it just looked so good on Friday. I don't even remember where
your entry was. It's probably down. Yeah.
But it looked really good. Trying to see if I can find it. I think we entered in here somewhere, if I'm not mistaken. It took the long up to this region. But yeah, try to avoid trading a sideways moving market, because then you're really speculating. Or as a new trader, you start second guessing yourself, or if you lose a trade, you feel like you don't know what you're doing. Whereas the market's just pinging back and forth. You know what I mean? So I'm sure a lot of retail traders got destroyed within this range, but it's just moving sideways. So try to avoid it if you can. But sometimes, on lower time frames, you'll be able to see a nice little intraday move or a scalp or something like that. But as far as swing trading goes, never try to swing trade a sideways market.
Right.
Last one.
EJ. If you have
Yeah, I was gonna say last one, euro yen. Where do I have? Don't I have euro yen on here? Hold on, let me move this out of my way. Yeah, there it goes. Euro yen is so choppy, man. I hate euro pairs. Hmm. Resistance there. I don't know why my thing is like lagging. We have support here. Boom. To me, it's looking like shorts as of now. What time frame? 4 hour. Oops. Sorry if you hear my son making random noises. Yeah, so price is just too choppy for me to even give you a confident bias based on what the 4 hour, or even if we say 8 hour, is looking like. I'm seeing lower highs form. Structure was broken, forming a new low. Broke structure over here. Broke past these previous higher lows, came up, formed a lower high. So I would say bearish, but then looking at the daily, still pretty bullish. So I think maybe early in the week, we could see a test of 126 again. Let me adjust this. I think we could get a test of these levels again. And then price come back down to like 124.5. But yeah, I mean, honestly, it's just too choppy for me. I wouldn't even want to mess with it. It's in a weird. That's the beauty in trading. You don't have to trade what you don't want to trade.
Mm-hmm.
You know, it's like pick the pairs that look like where the structure looks nice to you. I mean, for somebody who trades euro yen all the time, they may say they know what's going on with this, but for me, I don't trade it. So I'm not sure how strong, well, I don't trade it that often to truly understand how strong this 125, 500, and 126 region is. So I don't know which way it could break to. You know what I mean? But when it comes to like GJ or Pound Aussie, it's like I know those price points because those are pairs that I actually trade and I back test it and I know how price reacts. But right now, looking at Euro Yen, it's like this is a very strong region from 125, 350 to call it 126 seems like a very strong area. So I don't know, but I would guess bearish based on what structure is doing. And then the exhaustion that I'm starting to see from these levels. And then weekly is saying to me that price should be coming down for a correction back into the 124 area.
Cool.
You know, so
think this is a good place to go ahead and end it. Otherwise, people won't watch this recording.
Oh yeah, it's gonna be too long. Yeah.
Yeah.
Hope
But
got some
everybody,
value out of that. Drop some ones in the chat. Let's see it. Tell these guys thank you for the Nothing But Blue team.
I appreciate you
Let's
guys
go.
for joining.
yep, that's what I was gonna say.
Truly appreciate it.
If you took notes, I'd love to see your notes. Tag me on IG or Facebook. Drop some feedback. I put the YouTube channel in the chat. That's where we have last week's webinar as well as where we'll be placing this one. So I'll put that in there again.
Yeah, we'll get the recording up as soon as possible.
Yeah,
ASAP.
Josh, I think I'm gonna do a live video on IG this week. If you want to go live on IG with me and drop some gems there as well.
Yeah, that works. I think we already dropped our Instagrams in here, but yeah, we go live occasionally, guys, and just like answer questions, stuff like that. So feel free to add us on, follow us on Instagram, whatever you want to do, or whatever is easier for you. And we'll have another session next Sunday at 4:30 p.m. Eastern. We're gonna do them every week, same time.
MBB Sundays.
Cool. All right, guys.
I appreciate everyone.
Yep.
Thank you. Thank you.
Thank you, and we will see you on the next one.
See you guys.